Hi everyone, this is Manju here, and in this video we are going to talk about the power of index funds. So there's a saying in the science that what goes up has to always come down, but I would say when it comes to index funds, what goes down should always come up. So why do I say that? Index funds are nothing but the biggest companies listed in any of the country's stock market. For example, in India we have large cap, mid cap and small cap. Similar way in US, we have something called S&P 500, NASDAQ, Dow Jones, and so and so. Well, why do I say that what goes down should always come up in index funds? Because the very nature of stock market is always about fluctuations. Situations like COVID, interest rate hikes, and several other factors affect the market, and there would be always a huge volatile in the market. But when it comes to the long-term investments, always the companies are driven by fundamentals. So as a common man, you really don't need to worry about the fundamentals of the company. You really don't need to spend too much of time in analyzing any companies. Rather, what you can do is you can systematically invest on the index funds of any country, and you would see that the growth keeps happening because the money management is actually done by the index fund managers. Also, the biggest advantage when it comes to investing in index funds is the annual fees, or technically what we say is as expense ratio, is very low, which you need to pay on an annual basis, which would range anywhere from 0.3% to 0.5%, whereas the returns what you can expect from this index fund can range from 12 to 20% on an annual basis. Index funds can actually do wonders when your investment strategy is like long term. Something like 15 to 20 years would be the recommended timeline, and the best strategy would be to invest systematically every month, take part of your income, put it into index funds every month so that it keeps growing and you really don't need to worry about the market sentiments and the volatility. If you're in India, you can invest on Indian index funds, and also there are a lot of fund managers who actually offer investing in other countries' index funds, something like US, China, Australia, and various other countries. Keep in mind the expense ratio might be a bit higher compared to the Indian index funds. One of the other advantage of investing in other countries' index funds would be if Indian economy slows down for any reason, you really don't need to worry because other countries might be doing well and you take advantage of it, and your money still keeps growing. So just to show you an example, I have logged in into coin.zerodha.com, and here I have an example of HDFC Index Nifty 50 plan, where this fund basically invests on the biggest 50 companies of India, and you can actually see the current NAV, which means the cost to buy one fund from this plan. So it is 160 rupees, and CAGR, which means compounded annual growth rate, is around 15.79% for each year. So that's the approximate amount which you can expect from this current plan. The minimum investment is 5,000 rupees, and the expense ratio per annum would be 0.2%. Similarly, if you go down, you can actually see there is a bulk buy option, and also there is an SIP, which means systematic investment plan. You can come down and you can see the sectors where this fund has been investing and the companies where it's been investing. If you like to know the various index funds available and the companies that offer index funds in India, you can check out this link at etmoney.com, where it lists down all the funds in India. So here you could see IDFC Nifty fund, which focuses on large cap and growth rate, the current value with expense ratio and everything. The lower the expense ratio, it's better because the commissions would be low, and you would get the growth rate as well. When it comes to the long term, always the lesser the expense ratio is, it's better. Here's an index fund which invests on
US stock exchange called Motilal Oswal S&P 500 Index Fund. And you can also see the list of companies that invests in, such as Apple, Microsoft Corporation, Amazon, etc. You can also see there is another one, Motilal Oswal Nasdaq 100 Fund of Fund. So there are various other index funds in the market which you can discover and you can invest in them.
Alright, hope you liked this video. If you liked it, please click the like button, and if you have any comments or questions, please put it in the comments box, and don't forget to subscribe, and I'll see you in the next video.